Once again, good day. I'll just speak for a few minutes here before we get started so that we can give some people a few more minutes to come in, but then also make sure that we can get started soon so that we don't take up too much of your time. Once again, my name is Bill Mills, and I am with MyTrueProsperity. MyTrueProsperity is a group of folks who really just are interested in helping those that help others. So we like to say that we serve those that serve, specifically in the financial capability community. And happy to have any further conversations about that offline if anyone has any questions. Oh, yeah, there's me. Once again, Bill Mills. Just a few quick ads here real quick. We are doing our virtual VITA training again this year. You can find out more about that at mytrueprosperity.com/VITA-training. And that is where we will train your volunteers to be able to pass the IRS exams. So yes, we are doing that again this year, and we have clients from all over the country that we work with. Many of you actually are on the line. Also, this is something that we just announced this morning, and it's our prosperity tour. So we'll be going around the country and talking to you and working with you and all of the financial capability practitioners on better serving your clients. This is our prosperity tour. This year is behavioral shifts, tools, and solutions for financial change makers. So if you are interested in bringing this to your town, please go ahead and go to prosperitytour25.com and we will see what we can do to bring it to your area. I've had a lot of interest so far. I've had, let's see, Washington, D.C. and several in Florida, as well as Oklahoma and Georgia. So hopefully I'll see you guys around and in person. Also, we want to make sure that you're aware, save the date down for the Financial Capability Training Conference in Orlando from May 28th through the 30th of 2025. So save that date. More information is to come on that. So once again, it's Orlando, May 28th through the 30th, 2025, and this is specifically for financial capability practitioners. All right, looks like we have a nice group of people in. I'll go ahead and get started with the introductions. Actually, I'll let them introduce themselves, but I just wanted to give you just a quick background on how this came about. So I had the great pleasure of working with Paola and at the FDIC, and she was talking about how there's a new survey out of VITA folks. And when I got to see it, I'm like, wow, we really need to get this out to as many VITA people as possible. So that's why we brought it here to you. And I want to make sure that we get it out to as many people as possible. So we will share this recording afterwards. So if you don't mind, I'd really appreciate if you share it with any others who think who you think this might be important for. So with that, I do want to pass it over to the community affairs representatives, Paola Diaz and Mia Sowell from FDIC headquarters. Ladies.
Thank you very much, Bill. And before I even introduce myself, I would ask you to go to the disclaimer slide, especially because this event will be recorded for future reference. And I just want to remind everyone that reference to any specific organization during this presentation does not constitute an endorsement or recommendation from the U.S. government. And with that, I want to tell you just a little bit about me. I joined the FDIC in 2014 to help develop the first FDIC Economic Inclusion Strategic Plan. And I've had responsibilities overseeing various priorities over the years. Currently, I'm responsible of building households' financial stability, which entails consumer credit, savings, and credit building and rebuilding, which I know are your areas of specialty. And we will not discuss in detail another area of my portfolio, but I do not want to miss the opportunity to mention it. That is the Special Purpose Credit Program, SPCP for short, which is a practical framework that intermediaries like you might want to learn about to educate your lending partners about it. 8 regulators issued an interagency statement in 2022 encouraging their regulated entities to consider SPCPs to increase their lending to underserved populations by establishing targeted lending programs for borrowers that might otherwise not qualify for loans without certain flexibilities. So in the simplest terms, SPCPs enable lenders to create consumer loans for affordable housing loans, down payment assistance programs, and small business loans for people of color or people with disabilities, veterans, LGBTQ+, rural communities, and other minority and underserved populations. I also monitor fintech developments that foster economic inclusion, and most recently, I am part of a team working towards mobilizing intermediaries to volunteer at VITA sites, establish more partnerships with VITA sites, help VITA clients to open bank accounts before their tax filing day, and hopefully allocate some of their tax refund into savings accounts like savings for emergencies. My colleague Mia Sowell will tell you more about this initiative, and I will invite Mia to please jump in to introduce herself.
Good afternoon. My name is Mia Sowell. I'm a project manager on our community affairs team at the FDIC. My main area of focus has been account access for consumers, which focuses on creating and sustaining foundational banking relationships, where one of the goals is to establish an on-ramp to the U.S. financial system, setting the stage for future financial success. I also lead our national efforts to encourage banks to support and partner with VITA program, which I'll speak about later today. And finally, I work on the FDIC's Deposit Insurance Public Awareness Campaign to raise awareness about deposit insurance and benefits of its coverage. Thank you.
And we've prepared audience engagement today so that we can capture some of your insight and reactions to the presentation that you will hear. And I would ask that you please point your cell phones towards the QR code that you see in the screen. But you can also participate from your browser or computer. So I did put the link that you see in the screen in the chat for you to conveniently open that. And since we've introduced ourselves, we will want to know more about you. So if you didn't mind, it would be great to that you start answering the first question that you will see popping up either in your cell phone or in your computers. So we know that there were a number of registrants for this event that represented like 20 or more states. And we know that we have a lot of representatives from United Way. So Bill, if you didn't mind, let's go to the next slide, which showed the first question we were asking, but I think this is being intuitive, so people are beginning to answer already. If you didn't mind switching to the Mentimeter, it might show. So if you perhaps you go forward. Well, it seems like we are simply going to have to perfect. So now we see a little bit of the participation. So indeed, we have a good number of staff of VITA sites and a staff of nonprofits that provide financial education and coaching. So yeah, we anticipated we were not going to have a lot of financial institutions today. But the main goal of all of the information we are sharing today is for you to engage more financial institutions with your organizations, the work you do. So we can go to the next slide. Thank you. I will provide a very brief overview of the agenda. Today, you will be hearing an overview of the FDIC, the FDIC's Economic Inclusion Strategic Plan, and the Community Affairs Function. which is very similar to what other community affairs specialists do in other financial regulatory agencies. We will have 2 Q&A segments. The first after I complete the overview of the items I just mentioned, and then my colleague Mia Sowell will discuss an overview of the FDIC survey to VITA providers. She will provide FDIC resources to engage financial institutions and FDIC resources for consumers that are ready to go out of the go. We will have another Q&A segment, and we, of course, have a call of action to you after we presented all of this information. Next. Thank you. So I provided the seals that are most commonly shown at financial institutions that are federally insured for you to see. Hopefully you are familiar with these symbols that basically represent one of the primary functions of the FDIC on in ensuring deposits of all depositors in the United States. We also examine and supervise financial institutions for safety, soundness, and consumer protection laws. We make large and complex financial institutions resolvable, and we manage receiverships in the unlikely event that a bank failure has occurred. As I explained earlier, all of the financial regulatory agencies have a community affairs function, and our primary mission is to promote economic inclusion and community development through collaborations with internal and external stakeholders committed to strategic initiatives that impact low and moderate income individuals and communities. Let's go to the next slide. Our most recent update of the FDIC's Economic Inclusion Strategic Plan was published in 2023, and we took a fresh look at our expected outcomes with each priority area. So you might recognize what we intend to create with these initiatives is first, create and sustain foundational banking relationships. And with that, normally the next layer of a relationship between a consumer and a financial institution is all about building household financial stability, which is my area of responsibility, and I explained earlier what it entails. Then, ideally, once the consumer has access to banking services and the smaller credit and has a good credit building or credit score, that person is well qualified to in position to access an affordable housing loan or a loan for a small business endeavor. And finally, ideally, this will help create an environment where people can live in strong and healthy communities. So we're gonna do a quick dive into some of the theories of change that we've devised for each of these economic inclusion areas. And I'm gonna ask Bill to go to the next slide and Mia to quickly jump in to tell us about our theory of change for foundational banking relationships.
Sure. So opening and maintaining a bank account is fundamentally an important step for consumers to make progress towards achieving their financial goals. But one of the key challenges for consumers include a lack of trust in the banking system and concerns about requirements and costs associated with bank accounts. So to improve consumer trust in the banking system, at the FDIC, we're leveraging strategic partnerships with trusted organizations that serve unbanked and underbanked populations to raise their awareness about the benefits of safe and affordable accounts, and in particular, seeking partnerships with those organizations that directly serve low and moderate income and other underserved communities who tend to have a higher rate of being unbanked.
Thank you, Mia. Let's go to the next slide, where I will tell you a little bit more about what we mean by building household financial stability. And in particular, things that are relevant to you are underlined in red. We thought that you will want to be interested in learning that we want to inform consumers and intermediaries about safe and affordable products, and also help consumers to build credit and have access to the strategies that will help them do that. And I know many of you played that specific role. Also, we encourage banks to offer products that help people build credit, and that is a big emphasis of what we do. Finally, I'm just going to stop for a minute on our next the theory of change about CRA, which is the community development portion. So let's go to the next slide. Oh, okay, perfect. So you have heard me and Mia already make a reference to the Community Reinvestment Act. You will likely hear us again talking about that. And the way I like to explain it is CRA is basically the bank language. If you explain or you convey a need that you have to a bank in CRA terms, you might be able to really caught their attention. So it's very important that you learn about CRA, and we make sure that we equip community-based organizations with the information they need to speak in those terms to banks. Let's go to the next slide. And more broadly, now that we've dived into 3 of our 5 strategies, FDIC basically relies on 3 strategies to advance its economic inclusion priorities. On the partnerships and collaboration, as we described earlier, we work with federal agencies and local government agencies, nonprofits, and we provide information and technical assistance that help banks to respond to credit and banking needs in the communities they serve. And for example, some of the national organizations that we work with that you may be familiar are Credit Builders Alliance, and national associations of credit counseling organizations and credit counselors, and organizations like MyTrueProsperity. In the awareness of education aspect, what we do is we mostly focus our outreach to intermediaries, I should say, like the leaders and staff of banks, government, and nonprofit organizations. But we also develop information and resources for consumers, such as public awareness campaigns that you will hear a little bit more, Mia talking a little bit more about that. And we also provide a lot of financial education resources. For example, we also have resources for Spanish speakers. And I know that is, we have a lot of representatives from Florida and other states that have organizations that serve Hispanics. So you might have you might want to take a look at those resources at fdic.gov/Espanol. And every hyperlink you see in this presentation will actually take you to the resource that we're discussing. And finally, we use our prong of research and innovation to inform our priorities and to educate our communities about the issues. So the National Survey of Unbanked and Underbanked Households is what the FDIC is most known for, because we keep track of the banking status of households in the United States. And we do so every 2 years. Our most recent survey was from 2021, but we're about to publish the one for 2023 this fall. We also recently completed an FDIC survey of VITA providers. That's what we're here to discuss. And also we try to identify pilots that are promising practices to expand access to the different banking products that we've mentioned. And we do other research. So we are just highlighting a few things here, and we hope this will drive you to our website. Let's go to the next slide. I couldn't miss an opportunity to highlight some of the financial education resources that we have. So basically, we don't think that nonprofits should spend any time or effort in developing basic financial education materials, because we make this available for you to you for free, and they are copyright free. We appreciate it when people credit us when they use these resources, but you don't have to. So the next slide. I wanna. It takes a couple of minutes to join the Money Smart Alliance. We list Money Smart Alliance members in our website. Banks often look at this list to consider organizations for CRA investment and service opportunities, or as community development contacts. We provide train-the-trainer assistance to Alliance members, and there's an online resource center for teachers. We conduct Money Smart events that serve as train-the-trainer, or town halls featuring organizations that use Money Smart products successfully. We normally record these national webinars for future reference. Also, presenters at these events are organizations that you might want to consider as a reference. Usually, the banks and organizations involved in teaching Money Smart have other economic inclusion initiatives in place. Next slide. I also want to highlight one of the most relevant product developments for Money Smart is called How Money Smart Are You? This is a product readily available for consumer use. And while most of our Money Smart products are designed as instructor-led resources, we know that coaches use Money Smart modules to supplement the advice they provide during their coaching and financial education sessions. How Money Smart RU is available in an institutional as an institutional resource, which means that organizations can join as institutions, and their users or clients will let them see what's their progress on the different games they're taking. So this is a very important feature you might be interested in. So at this point, I can stop for questions if there are any. So I don't know, Bill, if you have noticed any in the chat. Well, and we can have people to please think of those questions, and we can proceed to the next section and stop again later for questions.
Wonderful. Yes, you're always welcome to raise your hand or put questions in the chat box.
Well, we give people a moment to think. We can move on to me as part of the presentation.
Okay, thank you very much, Paola, for that great information about our FDIC Resources and Economic Inclusion Plan. We can go to the next slide. So most of you are already familiar with VITA and know that many taxpayers who use VITA services are low and moderate income, persons with disabilities, or with limited English proficiency. These are also populations that the FDIC reaches through our economic inclusion efforts. Next slide. The IRS encourages individual tax filers to direct deposit their refund in order for them to receive it faster. Taxpayers can have their refunds split in up to 3 accounts, which also offers a great opportunity for them to save a portion of it by having it direct deposited into a savings account as well. The IRS also directs tax filers to visit the FDIC's GetBanked webpage for those who do not yet have a bank account and need to open one. And we've partnered with IRS on this effort during the pandemic when households were receiving their economic impact payments or stimulus checks in order to provide them fast relief. Next slide, please. So this upcoming tax filing season will also mark the 50th anniversary of the Earned Income Tax Credit, and the IRS wants more qualified households to claim their tax credit. You're probably familiar, the tax credits for eligible low and moderate income workers and families with qualifying children. The average amount last year of the tax credit was about $2,500, but approximately 20% of households that are eligible to receive that credit have not received it in recent years because they haven't filed their taxes. And that represents really about $14 billion of unclaimed tax credits for over 5 million households. And that money could have been going directly into a bank account. So that offers a tremendous opportunity for us to reach a significant number of households who are unbanked or underbanked. Next slide. And so for those organizations that are on today's call that directly serve low and moderate income consumers, but maybe you're not a VITA provider, make sure that your clients are aware about the free tax return preparation that is offered through VITA. And there's more information on the IRS website regarding who's eligible to receive that tax assistance for free, what information and documents to bring to their appointment, and how to find a VITA location near them. Next slide. So now I'm going to share some of the main takeaways and implications of a recent FDIC survey of VITA providers. There's a lot of data and information on these slides, which you will receive, or I think you've already received the slides. So I'm just going to highlight a few things on each slide. So the purpose of the survey is to explore opportunities for economic inclusion at VITA sites that provide the free tax preparation. Why did we look at VITA sites? Well, one of our recent national surveys of unbanked and underbanked households in 2021 found that 1/3 1/3 of newly banked households open new bank accounts in part to receive their economic impact payments, which we refer to as a bankable moment. And from that finding, we wondered what other opportunities could also be a bankable moment. And we thought that there would be potential for economic inclusion at VITA sites because at tax time, an unbanked household who's receiving a refund or credit may want to open up a bank account to direct deposit their refund. And VITA sites help people get their refunds. And finally, the IRS tells us that receiving a refund via direct deposit as opposed to a paper check is safer, faster, and cheaper. And therefore, the FDIC wants to encourage unbanked VITA tax filers to open a bank account. Next slide. So the survey asked site-specific questions to get an understanding of site-level operations. We asked a different set of questions for VITA sites that did not have a partnership with a bank or credit union versus those that did. And for those that had a partnership with a bank or credit union, we asked how they helped their unbanked clients open bank accounts in order to receive their refunds. And for sites that did not have a partnership, we asked them what was preventing them from having a partnership. Next slide. So the survey was fielded in mid-2023 after the completion of the 2023 tax filing season. And we constructed our survey pool from multiple sources of sites, including those that historically post their operations on the IRS public search tool, those that have won IRS grants, those that serve Indian country and historically underserved populations. There are 351 sites that responded to the survey, which was a 72% response rate, representing sites that span 49 out of 50 states. Next slide. So 28% of our responding VITA sites had a banking partnership, while 72% did not. So we were able to obtain a diverse set of sites in terms of the demographics of their locations. 21% were located in majority Hispanic census tracts, 19% located in majority Black census tracts, and about a quarter of the sites were located in non-MSA counties. Next slide. So now I'll present the main takeaways of the survey. I'll distinguish between those findings related to sites that had a banking partnership versus those that did not. And we looked at whether there was demand for banking services at VITA sites. And for those with a banking partnership, they noticed that they provided assistance to their unbanked clients to open a bank account in the tax season that they were serving. And we asked what they were planning to do in the following tax season. 94% of them said they plan to either continue their efforts or increase their efforts in the following season. And of those that plan to increase those efforts, 78% cited greater demand for those banking services. Next slide. For the sites that did not have a banking partnership, we asked why they didn't. Only 38% cited lack of demand. Instead, there are other barriers which I'll cover shortly. We also asked if they help their clients direct deposit their refunds using some alternative methods, such as a prepaid debit card. But 41% of them did not offer their unbanked clients any other options, meaning that those unbanked clients would have to receive their refunds as a paper check unless they did something on their own initiative. So again, these are opportunities for opening bank accounts. Next slide, please. So when asked what was preventing those non-partner sites from forming a partnership with a bank, 75% of them identified at least one knowledge, comfort, or resource barrier or gap. And I'll describe those. A knowledge gap, for example, is when they weren't aware that a banking partnership was even a possibility. They didn't know how to execute one or how to find a banking partner. A comfort gap, for example, is when volunteers or staff felt uncomfortable providing banking services to their clients, or they worried how they were going to keep client privacy by providing banking services, or maybe they didn't know how to remain neutral if they were going to guide their client to a specific financial institution. Or maybe some clients worried that they would be charged high fees from banks. And finally, a resource gap would be, for example, a lack of funding or in-kind support, such as in-kind office space or people, volunteers, and time, and even sometimes a lack in the availability of the bank to actually serve their clients. Next slide. We asked sites that have banking partnerships how they met their banking partner. 31% responded that they met through a joint event, such as maybe a bank on coalition or a local FDIC Alliance for Economic Inclusion meeting. 25% indicated that they were initiated by the bank or credit union themselves. Next slide. We also asked sites that have banking partnerships what practices they found useful for increasing the use of direct deposit. 41% of them actually used tools that did not require the physical presence of a bank employee on site. For sites that referred their clients offsite, some of them used warm handoffs or more personal referral methods, such as an introductory email between the bank partner and the client to help schedule an appointment for the client at the bank, informing them what the partner can expect ahead of the tax filing appointment. And VITA banking partners also could use alternative methods to encourage direct deposit. 85% of those that provided their clients with a government link or a trusted website about opening a bank account found those to be very useful. Another thing on the next slide that we saw among VITA sites with banking partners is that there are still opportunities to increase economic inclusion there. For example, 41% of sites did not provide on-site account opening assistance, even though their clients were coming on site to get their taxes prepared. For sites that were using off-site referral methods, only 20% of them used that warm handoff of introducing the client directly to a bank. For sites that provided virtual tax prep services, 25% of them did not mention the availability banking services to their virtual clients. And only 41% of partners of those VITA providers that had a partner confirmed that the accounts being offered to their clients met Bank On national account standards, which are accounts that have a low initial deposit, they don't have overdraft fees, and there's low or no monthly fees for those accounts. Next slide. So, thank you. So we asked VITA providers what their willingness was to connect their clients with safe and affordable bank accounts. And we found that both partnered and non-partnered sites were very receptive to sharing information with their clients about the accounts, as well as partnering with institutions that provide those accounts. Since the majority of the survey respondents did not have a banking partnership, and that potentially may reflect the pattern in the VITA population as a whole, these results suggest that there is substantial potential for increasing economic inclusion at VITA sites through the route of safe and affordable bank accounts. Next slide. So what did these main takeaways imply to us? Well, VITA sites that don't have a banking partnership could benefit from efforts to connect them with a banking partner, especially one that could provide a safe and affordable banking product. Networking events can promote partnerships between banks and VITA organizations. Banks can be informed of the role of VITA sites and consider the benefits of initiating partnerships. And VITA sites can confirm that current or potential partner financial institutions provide safe and affordable accounts, such as accounts that meet Bank-On national standards. So, for example, a financial institution that would partner with a VITA organization may be eligible for a favorable consideration under the CRA regulations, which Paola mentioned the CRA regulations earlier. And VITA sites themselves could confirm that the current or their potential partner, banking partner institution is indeed providing safe accounts to their clients. Next slide. A second implication for sites that don't have a banking relationship is that they could benefit from technical assistance, such as how they form and execute a partnership, or they could benefit from information to help them address their knowledge, comfort, and resource gaps that I covered earlier. So they could benefit from materials that share practices that VITA sites consider useful and that explain what banking partnerships are and how to form them and implement them. They could benefit from materials that address common concerns, such as whether volunteers and staff that are providing the banking services is appropriate. And finally, they could benefit from tools that allow their VITA locations to easily identify local branches of institutions that offer bank-on accounts. Next slide. The third and final implication was that opportunities exist for economic inclusion, even among those VITA sites that already have banking partners. For example, implementing more personal referral methods when adopting off-site account opening practices, including that use of warm handoffs. Also, providing account opening assistance on site when clients are already present for their tax preparation services. And VITA providers can communicate with their clients during other steps of the tax preparation process that account opening assistance is available, including when sites deliver their services virtually. Next slide. So I encourage you to review the FDIC survey of VITA providers report for more details. It is available on our website. A link is included here on this slide, which you currently have. Next slide. And so now I'll transition into some of the things that you can consider doing now as we approach the upcoming tax season. And the FDIC is really seeking to encourage more U.S. households to open foundational bank accounts and build savings to increase their financial stability as they work with VITA providers during the tax season to file their taxes at no cost, to receive tax credits and refunds for which they qualify. We want to increase awareness about the opportunities and benefits for partnerships between banks and VITA providers, such as with a bank account. Again, they can get their refunds fast and at no additional cost if it's direct deposited. There are also opportunities to increase the number of VITA volunteers, particularly if the bank's employees participate as volunteers. And VITA-related activities, again, may be eligible for that favorable consideration under the Community Reinvestment Act, or CRA. Next slide, please. So I also just want to take a moment to discuss the importance of reaching households during tax time. Again, our FDIC research, which I just walked through one of the more recent ones, but our prior research, again, has noted that households receiving a government payment have really indicated that they contribute to their decision to open a bank account. Next slide. So to facilitate these collaborations between VITA providers and banks, Here are some things to consider doing as a VITA provider before tax filing season actually starts. So you can utilize the FDIC's bank find tool to find banks in your area. The name and location search allows you to find FDIC insured banks and branches. You can also download your search results into an Excel spreadsheet. Next slide. VITA providers can also encourage their tax filers to visit fdic.gov/getbanked to find a bank account. Our webpage has lists of banks where they can open an account online with a low opening deposit. There's also information about the benefits of banking. There's guidance on how to choose the best account that's best for their needs and what to expect once they're ready to open an account. Things such as being prepared to sign certain documents, whether that's online or in person, showing ID, and making an initial deposit. Next slide.
Actually, Mia, just real quick on this
Sure.
one. I know that there was a question, and I think it actually works real well if you kind of answer the question right now based on what you just discussed. And this is from Casey Gilbert. Casey said, we have good relationships with most of the banks in our region and have some of them involved with our VITA program directly through volunteer support. We fall into the category of wanting to remain neutral in our banking partnership when it comes to promoting banking services. What advice do you have for VITA sites exploring bank partnerships with several different companies in the area?
Great question. And yes, we definitely appreciate wanting to remain neutral in those recommendations. One of the responses that we received during the survey and what we continuously hear is that when they are able to provide information that's through a government resource, that sort of alleviates the possibility of bias. If you visit our GetBanked webpage, we have lists of banks that offer the affordable accounts, including the bank on accounts with those low fees and no overdraft. That also the bank on site, it will also allow you to search for areas based on your state. And many of them have what they call bank on coalitions, which typically represent local government organizations as well as multiple financial institutions, banks, and credit unions that participate in the coalition in that area. So you may find that to be helpful. Okay, and some other considerations for those who are VITA providers seeking a bank partner, contact your banks early in your area. Don't wait until tax season starts. You can plan now. You can inquire about the bank's ability to offer virtual or remote bank account openings. This may be helpful if they're not always able to have staff on site to open accounts. Also, articulate what your needs are for the upcoming tax season, whether it's offering suggestions like computer equipment, the need for volunteers, bank account opening. Also remind them that the partnership is an opportunity for them as well. They can expand their customer base, and again, VITA-related activities may be eligible for CRA consideration. Let them know what your tax preparation timeline is, and be sure to update your website to include a direct link to fdic.gov/getbanked for your consumers to find a variety of accounts that they can consider. And if you have a partnership with one or more banks, then you can include that information on your website and direct the bank's website on yours. Next slide. If you're a bank visit the IRS VITA website. I don't know that we have any banks on, so I'll just say, just to save time, that there's resources for banks that are also here. And if you want to learn more about how to get involved with VITA, and then on the next slide, you will also see information about our FDIC resources on our Banker Resource Center to learn more. On the next slide, we also have a description of various ways that banks can participate in the VITA program. And you can feel free to share these with bank partners that you are pursuing. So with that, I believe that concludes my portion of the presentation. Thank you so much for your time.
Thank you so much, Mia. And I've been actively responding to some of the questions that came up in the chat, including links to resources. I want to ask the audience to once again engage with us so that we can identify, based on everything you learned today, what actions you might take or what opportunities might come from the MyTrueProsperity network, so that this will create more work for Bill and I to follow up after this event, but we're happy to do that. So I've opened the Mentimeter again, and it would be nice, Bill, if you can show us the progress by switching to the Mentimeter view. So we have very little participation, so let's give people some time to continue. So I just want to restate for those that might have not been attentive to the chat a few things that I responded. Well, somebody asked how does it take to, or what's the process to join the Money Smart Alliance that I mentioned earlier? It takes 2 minutes. I provided the link, and the link to these slides will have a link to the Money Smart Alliance as well, or you can Google FDIC Money Smart Alliance and you will join. Also, we're being asked, what about credit unions that may be willing to open bank accounts that are safe and affordable, like those that Mia mentioned? So usually Bank On is a good place to start, and they do work with both credit unions and banks, and they have identified different types of products in their geography, so do check out their website. And okay, so let's stop for a moment to see where we are on potential opportunities. So it seems like there's a lot of interest in forming collaborations with banks. So good news, we have the steps about how to go about that. Then great interest in using FDIC Bank Find and GetBanked to find bank partners. By the way, something I should mention that you can Google as well is the FDIC MDI and CDFI Bank locator. So it tells you where those institutions are in your community. There's an additional resource to find institutions. We'll place FDIC GetBanked page in my web page of communications. Very important to note, one of the participants asked, I want to provide just objective information that doesn't sell any product. Well, this is the solution. FDIC.gov/GetBanked. That is a great resource that's designed for consumers that you can feel free to share so that they can find different ways to identify financial institutions that might be able to open accounts for those clients of yours. So, well, this is great feedback. And while you also have our contact information, we will be eager to hear from you if you're interested, or you can directly connect with our local community affairs specialist. I will tell you how in a minute. So, but before we even do that, I would like to get to the next audience engagement, where I wanted to capture. So, Bill, if you don't mind going to the next slide. Please, what do you think is the biggest challenge to engage banks with your VITA efforts? Oh, sorry, now we're 2 slides ahead. So in the Mentimeter, again, we would love to capture what do you think is your top challenge? Because as Mia described, we created resources that addressed the challenges that we heard from our VITA survey to VITA participants, and we've created a number of resources that address that. So if we can get additional insights from you, that would be very helpful. You can always help us to continue to do more outreach like this, or emphasize on certain parts of the information we've shared today, so that it is clear and easier for you to take action as soon as you've attended one of these events. Well, I'm gonna leave it open. I don't see a lot of, okay, finding the right contact. Indeed, that is a good question. I suppose that this person may be talking about finding the right contact in the bank. So usually there's several partners that you have at the financial institution, and possibly the person that you might interface with the most may be the person that's responsible of community affairs or community relations. But you might also you can actively inquire who is the community reinvestment officer. And at times when it comes to meeting the lending needs, then it is appropriate to talk to whoever is the consumer lending or small business lender in that institution. So it is important to talk to several people in the bank, especially if it is a bigger bank where they have corporate offices that sometimes might make certain products available in certain markets, but not everywhere. So it is important to establish deep relationships with your financial institution. So thank you so much for the feedback. I am going to move on to the next engagement, where we welcome recommendations for the FDIC to facilitate collaboration during tax season. So that one I'm going to leave open, and so that you can contribute to it. Well, I present a few more resources and information that might be helpful for you to take action. So, Bill, if you don't mind, let's come back to the slides. And if you want to, Bill, also we could stop for a moment. I don't see any questions in the chat or raise hands, but you might have received the private questions. Okay, then we can go ahead and repeat some of the resources we mentioned earlier. So we strongly recommend that you review the FDIC Economic Inclusion Strategic Plan. The link you will receive will take you to the chart that hopefully you've grown familiar with, and it will provide an overview of the plan where you can hopefully easily align your own priorities with ours. Because I think we find it a lot easier to form partnerships when you see that direct alignment. Download and use MoneySmart. I mean, you are only 2 clicks away from utilizing any MoneySmart resource that I described. Join the MoneySmart Alliance. I mentioned how. Subscribe to MoneySmart News and Consumer News. Also, consider using this as an engagement tool, because one of the things that Mia has been discussing is that it is important sometimes to be able to be in touch with your clients all year long or before the tax time appointment, because the tax time day, or the tax filing day, they're very focused on trying to get that done, as well as you as a volunteer or the VITA site staff. And there's not a lot of time to help someone open a bank account. It is more effective when they have done so ahead of time. And you can send nuggets of information by borrowing from our MoneySmart News and Consumer News, and send that information just to stay connected with your clients, and always prompt them to take action that will help them on tax filing day. Register for local and national community affairs events. Well, I did receive a question that was private in the chat that was how to engage with community affairs specialists, and how do they know if what the FDIC is doing in their community. So one good way to have a sense of what's going on in your community and what the FDIC local community affairs specialist is doing is to look at the Community Affairs Events webpage. We do keep records of our prior events, so you can use a keyword to identify your state or your geography or your topic of interest, so that you can have a sense about what FDIC is doing. Most of our events are public, but some of our events are closed doors and include activities like listening sessions, where we do listening sessions with the financial institutions. Other times we do listening sessions with community-based organizations. Also, we strongly encourage you to engage for the upcoming tax season and disseminate the resources that we've shared with you. let's go to the next slide so that people who are representing all over the United States can have a sense about how the FDIC is organized. So we are organized in 6 regions: Atlanta, Chicago, Dallas, Kansas City, New York, and San Francisco. And as you can tell in this map, the states that are included in each of those regions are, clearly identifiable. So you lead, Mia also mentioned the FDIC, Mia and I mentioned the FDIC Alliances for Economic Inclusion as an ideal place where sometimes these connections happen between banks and community-based organizations. Well, we do have alliances for economic inclusion in 11 markets, as shown in the map. We do have networks everywhere. So roughly, we have an FDIC Community Affairs specialist covering the economic inclusion issues in every state. In big states like Texas and California, we have 2 or 3 community affairs specialists. But there's always someone who's working on economic inclusion issues in your area. We welcome your invitations for speaking engagements. In this case, we have national representatives because we had a national audience, but you can, connect with your local community affairs specialist to inquire an FDIC speaker. And sometimes they might do a version of this presentation for your local stakeholders. And if you want trainer events for Smart Resources, we have a team that handles those inquiries. Once again, one of the easiest things you might be able to do is to amplify the FDIC GetBanked webpage that has a lot of the information. We will be developing more specific resources for the tax season sometime very soon, and they will be included in the FDIC GetBanked page. So with that, hopefully we've given you a lot of food for thought and resources to help you take action immediately. Thank you for your feedback.
Very good, and thank you so much for joining us today, and thank you to Mia and Paola for bringing this information to everyone. We will share this, the PDF of this presentation with you. You should get it this afternoon. As I was trying to show you while we're going, all those links are hot on there. So it makes it a heck of a lot easier for you to just click on it and go through everything. With that, thank you so much for joining us today, and I hope to see you in your community.
Thank you very much, Bill, and everyone. Bye-bye.
Bye-bye.